The 2024 election is over. Congratulations to everyone who made it through it. Donald Trump is the president-elect for the United States of America. The betting odds were right, the polls were wrong, and I suspected this much because the betting odds have money behind them. The polls do not. Today is Wednesday, November 6th, and assalamu alaikum to everyone. The markets have been doing extremely well. The Dow Jones is up 3.5%. The Nasdaq is up 2.5%. S&P is up 2.3%, and the Russell is up more than 5%. So as I've been saying for a while, I thought the small caps were going to do well in the tail end of the year, and perhaps we're just getting started here. Dollar index is up and the VIX is down 20%. So a major source of uncertainty in the market has now been removed, and the market is telling us this much. The Fed has started its meeting and will come out with a interest rate decision by the end of this week. The market is pricing in basically a certainty for a 25 basis point cut this time around. Now, will the Fed guide towards another 25 basis point cut at the end of the year? Or will it guide towards an increased probability of a pause in December? We'll have to wait and see. In the meantime, our stocks have been doing extremely well. Tesla is up close to 15% today. I mean, yesterday I was saying I thought maybe Tesla would get to 300 and above 300 by the end of the year. It may do that today if it continues on the momentum that it's on. Nvidia's up. Bitdeer, Iris Energy, they had their update today. We'll go through that. Iris Energy up 22% today. HIMS is up 10%. We also have a dividend stock that's up 10%. So, we have, I don't know, 5 names in our portfolios that are up double digits just today. Enphase is down 17%, as is First Solar is down big today, 11%. The reason being, I think that there's speculation that some of the incentives that were given to solar energy may be going away under a Trump presidency. Luckily for us, we're not exposed to either of these names in our PIF portfolio. So if you've been following along, you've been shielded from this. And gold is down a bit. People are in more of a risk-on mood. Investors are. So we're now at 2,600 for gold. Bitcoin is up 8%. We hit a new all-time high yesterday. Doge is up a cool 14%, and Solana's up 11%. So really, our portfolios have been positioned quite well for the latest developments. You can see here, if you like looking at the map, really everything is green with exception to this corner right here, consumer defensive. That is solidly in the red. So mostly dividend stocks have not been doing that well. Blue chips have not been doing that well as the market goes risk on. Now, in the height of this euphoria, I think it's important to always look to be booking profits. Take a look at our sell above prices on our watch list. See what upsides are left for the names and trim accordingly. I may do some additional trimming. I took some profits yesterday. PIF members know what position I'm talking about there. And I'm looking to perhaps take even more profits as this bull run proceeds. Again, we want to be careful when when the market is greedy. We want to be greedy when the market is fearful. Real estate and utilities are also down. There is anticipation of interest rate cuts and what that will mean for profitability there. But really, the rest here is doing very well, green across the board. Interestingly enough, we saw Barack Obama was not taking the results of the election that good at all. He was seen at a Shia shrine saying "Adrikna ya sahib al-zaman," which was interesting to see. Iris Energy, as I mentioned, up 21% today. They did release an update. We'll go over that very quickly. So their October 2024 monthly investor update. Key highlights: AI cloud services. So there's an additional 1,080 NVIDIA H200 GPUs being commissioned. Preparing data centers for liquid-cooled Blackwell GPUs. They did mine 439 Bitcoins, 21 exahash installed with 16 joules per terahash efficiency. So this is the leading edge here in terms of efficiency. 31 exahash still planned for Q4 of 2024, which is 1 exahash above their initial estimate of 30 exahash in Q4. Data centers of 1.4 gigawatts. This energization schedule has now been pulled forward, so they're running ahead of schedule here, and they're aiming for April 2026 to have this online. Now, I think one of the most exciting things here is ongoing discussions with multiple hyperscalers regarding monetization structures. We did see a report from JP Morgan basically mentioning that agreements with hyperscalers need to happen in the next 6 to 8 months because the crunch in supply may not last beyond that. So, and I really think the two Bitcoin miners that are best positioned to have these contracts signed in this window of time are Iris Energy and BitTier. So I'm hoping that we get something like this signed. That could be a big boost for the company and its stock. Q1 fiscal year 2025 earnings to be released in the coming year. So we have that to look forward to. Now, something really good about the update today was their progress in Bitcoin mining. So the revenue per Bitcoin has been increasing, but that's really not something that you can attribute to the company itself. That's a function of the price of Bitcoin. But what was very encouraging was the fact that we're seeing the electricity cost per Bitcoin going down. This is very encouraging. So we went from 29,000 in August to 23,000 in September, and now at 20,000 per Bitcoin. That's the cost of electricity. This doesn't take into account the depreciation of the Bitcoin mining machines. But in terms of sort of cash outflow, electricity is going to be, once you've installed the Bitcoin mining machines, electricity is going to be the biggest source of your cash outflows. So mining revenue increased to close to 30 million. So we're talking about from Bitcoin mining around, if we want to annualize this, around 350 million for their Bitcoin mining business. That's in revenue. Their hardware profit margin is improving, and that's really important to see. So from 51 to 62 to 68%, that's their hardware profit margin, which is the trend that you want to see, and perhaps why the market has rewarded this company so generously today. And with regards to their AI cloud services revenue, we did get a dip last month, but we are recovering. That's because one of their customers did not extend their contract, but they did mention that they had other customers that they were talking to, and so we can see that their revenue has jumped back up from last month. It's still not a significant portion of their business, but they do plan on this being close to 10% of their business by the end of the year. And this is really exciting because the hardware profit margin here is 97%. So this is a much easier way to make money, AI cloud services is, than their Bitcoin mining business. And so increases in this particular part of their business, I think, is extremely encouraging. So they already had 816 NVIDIA H100s. This is installed and operational. They're adding 1080 NVIDIA H200 GPUs that are currently being commissioned. So they'll have 1896 H100s, H200 GPUs, utilizing less than 0.5% of Iron's data center capacity. So really, this is where the real growth in the business and its revenue, its profitability can come from, is if this 0.5% becomes 10% or 20%, then this company is poised to really print money. And I think that's what the market is seeing. And this 0.5% is supporting 32 million of illustrative annualized hardware profits. So you could see here, if you 10x this, 20x this, what this means for the company could be very, very big. Design and procurement underway to accommodate liquid cooled hardware, including NVIDIA Blackwell GB200 GPUs. Oh, and by the way, if Iris Energy is looking for a source for the liquid cooled Bitcoin mining rigs and wants to buy additional units, they can buy them from Bitdeer. I'm sure Bitdeer would be very happy to accommodate their request. So we're trying to get to 31 exahash by the end of the year and 50 exahash by next year. I expect this target to increase as their previous targets have increased before. So we went over most of this. Electricity cost reductions. And big part of the electricity cost reduction was the fact that they're utilizing the Childress location more, which has a low cost of electricity, 3 cents per kilowatt hours in October at least. So they have 510 megawatts of data centers in 2024, and the site that they're working on with an additional 1.4 gigawatt, that timeline has been accelerated. I mentioned April 2026. And if you look at their total sort of planned power output or input rather, and the data center capacity that they're planning for, it's more than 3,000 megawatts. So this puts it at either number one or two amongst Bitcoin miners in terms of the access to power that they're for, and therefore it makes it a very, I think, interesting company to do business with for hyperscalers that are really energy hungry. I mean, we've seen a lot of these hyperscalers are, Amazon, Google, they're going to nuclear energy to try and see if they can find enough power to power their planned data centers. So, I mean, if you're going to nuclear with all the regulatory hurdles, with all the concerns about nuclear, with all the pushback that you're likely going to get from different municipalities, from different governments that may want to push back on your efforts, and that means that you're really in need of energy sources and you're basically willing to knock on any door to find them. And so here we have these Bitcoin miners, specifically Iris Energy, Bitdeer, that have some really compelling infrastructure that I think puts them in a really solid position to do business with some of these hyperscalers. And that could really take their business to something else, really graduate it from Bitcoin mining into something much more serious. Or I should say much more profitable. Not that Bitcoin mining is not serious business, but much more profitable. Amongst all the businesses that you can be in, Bitcoin mining is a very hard business to make money from because you're constantly competing with a harder network, a more difficult environment to mine Bitcoin in, and therefore increasing costs. You're constantly raising money, you're issuing equity, raising debt in order to buy the latest and newest Bitcoin mining machines so that you're efficient enough to actually compete with other Bitcoin miners. And oftentimes, the increase in price in Bitcoin is eaten away by the increase in investments that you need to make in order to increase your mining capacity. It's a tough business to be in, and that's why I'm in the names that I am in with regards to Bitcoin mining. All right, let's talk about Hims and Hers, up a cool 10% today, and it has recovered very nicely. Close to 20%. At the time I told you I would be back, I tell you I told you so. I've already told you I told you so, but I'll say it again. So it recovered very nicely from the pullback that it got after the news came out that Novo Nordisk's um, medicine was no longer in short supply, and therefore perhaps the compounding license that Hims and Hers had may be revoked. So let's talk about their earnings and what they reported, because it was really stellar. And so their third quarter 2024 financial results came out, and their revenue, 401 million, was up 77% year over year. So by the way, revenue at 400, I mean, annualize that, that's 1.6 billion. This is a market cap of 4.89 billion. So for a company that's growing revenue at 77% year over year, this is a very reasonable valuation, I think. And there's more meat left on this bone, in my humble opinion, not financial advice. Not net income of 75 million, adjusted EBITDA of 51 million in Q3. Subscribers grew to 2 million, up 44% year over year in Q3. Now, when you think about what Hims and Hers is trying to do, basically offer personalized, online first, pharmaceutical services, basically for people who need medicine. And you look at their subscribers, it's at 2 million, right? And what is the total addressable market here? I mean, probably tens of millions of people. So, I mean, if it's able to grow to 10 million, that's, with the same profitability and the same revenue per subscriber, I mean, that's an easy 5x. I don't see why it can't get to 20 million users and maybe even beyond that. So just, thinking about it, napkin math here, and, where it is right now and the potential for it, this seems like a very compelling opportunity. And they're executing on all cylinders. They've proven out their model. The model makes money. It's cash flow positive. So it's just a matter of expanding here. It's just a matter of adding fuel to the fire. The fire is already lit. It works. The demand is there. It's just a matter of adding fuel to the fire to see how fast this thing can grow. So they've raised full year 2024 revenue guidance to a range of 1.46 billion to 1.465, and adjusted EBITDA guidance to a range of 173 million to 178. So it's always good when companies are adjusting upwards their guidance. So some comments from the CEO: improving momentum in both the Hims and Hers brands delivered another strong quarter of growth and profitability. Our execution against the strategy that brings customer convenient, transparent, and affordable access to care designed specifically for them is allowing us to reach millions of individuals across the country. In the third quarter, we eclipsed 2 million subscribers on our platform, with more than 1 million utilizing a personalized solution. These are significant. So this is very important. So the personalized solution makes the product sticky. When you have a personalized experience dealing with a particular company, you're less likely to change companies because they know you and you don't want to, start from zero, establishing a relationship with someone else. These are significant milestones and confirm we are on a path to helping an American in every household feel great through the power of better health. The CFO said, our model is rapidly gaining scale, driving accelerating top-line growth, improving profitability, and strong cash flow. We are seeing this strength across our business. Our new weight loss offering is helping a growing number of people and providing an accelerant to what was already a robust trajectory. Strong underlying trends continued as subscriber growth, excluding contributions from our compounded GLP-1 solutions, increased 40% year over year. So this is very important. This is what I've sort of been banging my hand against the table, telling you guys this business can survive without the GLP-1 solutions. This is, I mean, and the fear of losing the GLP-1 solutions is what caused the most recent dip in its price. But the business model is not dependent on this one solution. So even excluding the contributions from their GLP-1 solutions, their subscriber growth was 40% year over year. This is very important for people to understand. Benefiting from improving brand awareness, broader personalization initiatives, and new customers accessing care for multiple conditions. Our ability to unlock access to high-quality personalized care continues to expand, further instilling confidence that our model is positioned to help tens of millions of individuals over time. So this is what I told you guys. They're at 2 million right now. Their addressable market is in the tens of millions, and they have the plan to address that. So assuming the same revenue per customer, and I actually think revenue per customer can grow substantially from here, but even assuming the same revenue per customer, same profitability, not benefiting anymore from economies of scale, basically plateauing at where we are right now in terms of profitability, you can see 5-10x here easily. So subscribers, 44% increase between 2023 and 2024. That's for the 3 months ended September. And look at this, monthly online revenue per average subscriber also increased 24%. So not only is the count of subscribers increasing, and it increased to the tune of 44%, but also how much their spending is increasing. And this is really the sign of a very healthy business. And so in terms of numbers, total revenue 400 million compared to 226 million in 2023. So really solid results here. Gross margin of 79% for the third quarter. I love that. It did come down a bit from the third quarter of 2023, but I think that is temporary, and I think they can remain in the 80 percentage point level for gross margin, which is, I would classify, an easy way to make money. Net income of 75.6 million for the third quarter, which included 60.8 million tax benefit related to the release of a tax valuation allowance, partially offset by current period tax expense. This compared to a net loss of 7.6 million for the third quarter. So whereas last year they lost 7.6 million, this year in the same quarter, Q3, they earned 75.6 million. And let's see here, financial outlook. We mentioned, so fourth quarter 2024, they're expecting 465 to 470 million. Annualize that, that's around 2 billion, guys. And we're only trading at close to 4.89 billion. So I think the valuation, in light of the profitability of the revenue that it's generating, I think the valuation is quite reasonable. Adjusted EBITDA 50 million to 55 million, reflecting an adjusted EBITDA margin of 11 to 12%. That I'm hoping will increase. The 11% to 12% adjusted EBITDA will improve as economies of scale are achieved. All right, so all in all, really strong fundamentals here for HIMS, for Iris Energy. Inshallah, I hope that I've made some of you some money on these names. If I have, do leave a like. That really appreciate that. And if you'd like to know, where we invest in next, follow our portfolios, become a member. Link to do so is in the description. So with that, guys, let's go to questions. And assalamu alaikum to all. Nice to see you. Thanks for coming. Do I see miners continuing to rally here? I think there's a bit more meat left on the bone, but miners generally for me are a trade, not a long-term investment. So I will be looking to exit. We now see stock market approaching green territory. Should we stop investing, wait for a correction? So it depends on the name, really. And that's why we go through the bother of valuing each name, buy below, sell above. So I would keep track of that and just ignore whatever noise there is. So BTC is going to do well. I think that so Trump in his campaign was mentioning something about having a crypto reserve for the United States. That would cause crypto to go bonkers. If the United States ends up having a Bitcoin stash, that would cause really tall green candles. So yeah, um, there's a lot more meat left on the BTC bone. Hey, assalamu alaikum Taskeen. Great title for today. Any insight on Buffett selling off huge chunks of his portfolio? Yeah, so I think that in the businesses that Buffett looks at, there's probably the opportunities are few and far between, and increasingly so because he just doesn't like to invest in technology. But I think in the technology space, there's a lot of value there if you understand the potentials for these new technologies, especially as it relates to AI. I think the potential for AI is just it's mind-boggling, really. And so I think that you're going to see very small companies, 1 to 10 people. It's going to become normal for companies of 1 to 10 people. And yes, I said one to reach billion-dollar valuations. And there's companies like this that are springing up all the time. Companies that integrate AI into their businesses and are part of the AI supply chain are just going to do really, really well. And so we're just in the beginning of the slope upwards here for the transition to AI in the global economy. And so there's a lot of opportunity there. And you'll notice like a lot of my names have something to do with AI. And so uh, if you understand the potential there, and Warren Buffett has always been, shy in terms of investing in technology. Apple was sort of an exception to that. And so I can see if you're like excluding technology from the possibility from the possible companies that to invest in, you're going to find it very hard to deploy cash, and I think perhaps that's what is impacting Warren. uh yes, it says haha Obama, is that real? No, it's not real. um Azure Music says, Samarkand, so glad I joined PIF. Well, I'm so glad that you joined as well. Is it still a no taking profits from Bitcoin? Would it be better to take profit from alts and miners if one wanted to trim a little? I think yeah, you'll never go broke taking profits. So I would always advise instead of, taking a screenshot of your, portfolio, and when you feel like you want to do that because it's up so much, trim some of your positions and trim just enough so that you're happy if that you trimmed if it reverses, and if it doesn't reverse and it continues to go upwards, you're happy that you kept what you did keep. So striking that balance is sometimes tricky, but I think that's the right approach. Well, to see what I'm investing in, I don't make recommendations, but to see what I'm investing in, Tube 56, consider becoming a PIF member. For me, I think The miners that we have in our portfolio are the best. This is with regards to the question asking about Marathon. So we do update the buy below and sell above prices when a company reports earnings. So every 3 months, a company will report earnings and we'll update those prices. You don't necessarily have to buy. If the watch list is telling you nothing is in the buy zone, or the upside is limited, you don't necessarily have to buy. Sometimes being a net seller is okay. So investing on margin, even if it's interest free, I don't think is halal when you are buying from the source that is giving you the margin, because the source giving you the margin is going to benefit from the trades that you make on their platform. And so any loan that is made not as an act of charity is basically riba. Did you expect a Trump dominant win? I think I did. I think I did expect a Trump dominant win. And, if you look at my lives, I think I've said that. But I also know that it's not over until it's over. And so even though, I had a strong feeling that Trump was going to win, not because of him being a strong candidate, but because of his opponent being, completely um, um, unlikable, shell of a candidate that will basically do and say whatever the heck she thinks her the people behind her want her to say. That's why I thought, win would Trump would win. So yeah, I think this was more a function of Trump was seen as the better of two bad options than people actually being f- fans of Trump. I think even an average candidate could have done way better against Trump, because we've been through the Trump presidency before, and we know that his promises of sunshine and rainbows are just a fairy tale that he likes to tell himself. But people have short memories, and they were they were stuck choosing between two very bad options, and I think they probably chose the better of two very bad options, if I'm being absolutely honest. All right, guys, thank you so much for uh, tuning in. Leave a like if you enjoyed this live. Congratulations to everyone who has made money. And thank you for being part of our family. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.